Hi there, guys. How are you? Just let me know if you can hear me clear. Sorry, I was a bit late on then. Got sidetracked looking through some old trades. Funny enough, it was for talk about today. Who we got today? John. G'day, mate. Good to see you. Hope you had a good weekend too. All right, Helen. How are you, Helen? Hope you had a good weekend also. Well, let's rip into it. Welcome to Trade Setup and live stream. What are we now? The 23rd of September. So, for all you AFL fans, but the big day on Saturday, which would be good to see. Hopefully it doesn't rain too much and we get half decent weather, so it's a good game. Otherwise it gets a bit sloppy in the wet. G'day Jane, how are you? Um, Anyone that's new, thank you very much for joining us. Even if you're watching this later on, thanks for joining us. Feel free to subscribe at Twitter, top left. Facebook you can, but the bottom right is subscribe to us at YouTube. Now, on a different note, if you subscribe at YouTube, what you'll get, I'm not sure. I'm going to be doing a talk on, I think I mentioned this last week, on the Thursday night, around 8 p.m., 7 or 8 p.m. I think it's about 8 p.m. Melbourne time anyway. And I don't think I might be able to upload it to YouTube directly as I'm speaking live. So you will, if that's the case, then you'll get a heads up that we go live. If not, just watch out because it's more of a, not just sort of random stuff that we talk about now, but more of a structured presentation on trading and what we look for with some bits and pieces. So that, at the very minimum, I should be able to get a copy of it and upload it to YouTube, which then you'll get I think if you've subscribed to alerts or something, should pop up on your YouTube feed and you can watch it later on. But I'll see if I could probably just, I think I go through a different system, but I think I could just take a broadcast whatever's on my screen like I normally do, say now, and it should be directly to YouTube as well. But just keep an eye out for that. Um, Let me get rid of this now. Let's get into. So we had a good chat this morning about what happened on Saturday night, which is not much. Basically, the market sold off. I think it was around 3 a.m. our time, 4 a.m. when it got hit a bit on the back of the China news that they didn't turn up to the farm visits. They didn't. They did. They basically cancelled the farm visits, and that sort of brought about a few going into the weekend too. I guess is a bit of fear that trade talks are not going along the right track. Doesn't matter what people say. It's a bit of show me the money now at the moment. I think they've talked it up. Now it's a matter you've got to get going. You've got to start doing something. Otherwise, this market could sell off. And it just goes to show too. All the currencies reacted to that. Gold reacted to that. The US dollar is already moving anyway. That the US dollar is actually more reacting to rates in the US because it's localized, obviously. And that's a lot of that has to do with tariffs anyway. So if they come to a deal, then yeah, you'd expect the US dollar to pop up because they wouldn't be getting any more rate cuts because they're actually doing okay. But the longer that kicks off with tariffs and things like that, you probably find there's some more weakness can come into the US dollar because they'll be trying to factor in further rate cuts anyway. So yeah, it's all around trade war at the moment. You see the way the market was reacting to that news and the way they reacted. So gold popped up, currency sold off, had a bit of a spike. They're already heading that way anyway. Major indices, Europe was closed anyway by then. I think the futures did react. So we've got the FTSE and the DAX futures did react lower, all at the same time on the back of that news. So they've got to start to, they can't talk up high level meetings and keep naming it different things just to keep, I guess kick the can along the road, down the road, or what do they call it? They're going to start doing something, otherwise the market's going to start punishing them. I would expect, especially, there's a more likelihood we get to highs and we start punishing them if it doesn't happen. Although, in saying all that, our market's up quite strong. We're up 30 points today. Didn't expect that after just looking through bits and pieces. So what happened over the weekend? The news obviously came out Friday night, and we saw about it over the weekend about China pulling out the farm visits. Then you've got increased tensions between Iran and Iran and the US. I don't know why I say that. Iran and the US. The US they're sending, I guess, extra security over there for Saudi Arabia to beef that up. And I did read somewhere else that there's potentially, I don't know where it come from, and I probably couldn't find it now, about further attacks. I don't know if it was talks of further attacks or from an inside source, whoever that is, further attacks from Iran. And there was, I read somewhere else about Iran saying something, if we can't export, no one can. And that's potentially why there was attacks on Saudi Arabia. And obviously, all these sorts of things could kick off tension in the Middle East, which is going to, you would think, hurt the global economy. But it'd be interesting. I mean, at the moment, the market's powering higher, so I didn't expect us to open up, 20 or 30 points on the open today after all that. And gold is going higher, and our market's going higher. So it's kind of, it feels to me. I mean, let's just take a quick look at where is it? This is the SPY, and this doesn't make much sense to me. It's just getting, it seems to be just chopping around, supported here, pop back up, back down, sort of that range band action, really supporting this, trying to hold it at the highs. It just seems like that. I mean, whether it is or not, who knows? And you got, this is Wall Street, the Dow 30. That looks like it's potentially heavy. That was a sell-off at 3 a.m. Sold off into the close further. You got this candle down, and then it gapped up on the open today. It's struggled to get back up to new highs, or at least test back up towards these highs. It looks like it's falling over, whereas we have, that's our close on Friday after being sold off, and that was just prior to the sell-off. We took out that high. So we've taken out the high prior to the sell-off on Friday night, whereas other markets haven't. So it's a bit strange from a market, I would say, all in all, considering that it's affecting us. The longer the talk's gone, we seem to be negative on the back of tariffs and, China not sucking in any of our commodities and things like that because of the ongoing trade war. But we're going up, so it's kind of a bit of a mixed bag at the moment. Look at gold just tucked up to those highs. That was a high from Friday night. It closed about 15, 16. We've just taken out, well, we tested those highs. We're just backing off at the moment. This is the 30-minute chart, by the way. But gold stocks seem to be flying along. We got DCN. Don't ask me to say it because I can't. Which has just powered through. We've got to 165.5 today. It's up 10%. At one stage, it's up 12 or so percent. Now that's a good. It's really kicking along strong, which I don't trust. It's just a gap fill here. We're tightening up our risk on the final amount. We've taken always looks stupid when you take a partial exit a lot lower than where it kicks off, but you just never know. And I think I'm always happy to be prudent in these times. What else we got? Just looking at Perseus, having a bit of a squeeze at that. You can see that's heading high, and that's probably looking better. Go to the weekly. That weekly looks really good. So I've got my eye on that. I think it's been trading through since 2014 around these lows, around 30 cents. Lifted up, straight back down again. Start of 2017, it's been going sideways. But it's just, if you look at this high, if we can get up there, it's taken out that high anyway from back in 2016 with this push up, and it's come back down. We're just testing on top of the EMAs now, and potentially this could just drift up through 90 cents a dollar and extend that move up. We'll have to see. It's got some volume coming in with this move up compared to sort of previous rallies. So that's got some juice in it by the looks of it. But that's it at the moment. Gold, like I said, I'm just surprised that we opened up quite strong, and we haven't. Every time we drift lower, bang, we get, we're spiking back up. So look, we just did it again. We just sold off down to this low at 67.38, bang, up 7, 6, 7, 8 points, pretty quick too. So that's I'll be honest, I don't get it. I don't know. So that's why I'm sort of out of the market today. I don't trust this is going to be a rangy day, especially when we can't close that gap from Friday or early hours of Saturday morning. You would expect potentially this gap to close or retest down, but it's not. It's getting soaked up every time it sort of pops its head down there. So just be wary, guys. I think we mentioned this in the morning, talking about the market popping up on the open, and generally it's the old saying, retail opens the market, the professionals close it. It pops up, and then it's been drifting lower into the close a few times. Whether I don't know if you can read much into that, but it just seems a bit strange. Whereas if it was a buoyant market, you would expect it to be lifted into the close. Who knows? I mean, who knows? It's a bit suspect the way it's sort of chopping around here. When gold's showing that there's potential that, the fears out there. There's still safe haven buying into gold off this support zone. We've got to contend with that 1524 zone at the moment, but it looks like it's done quite a bit of time lifting off this support. And with all the headwinds around, you wouldn't expect gold to come down. To be honest, you wouldn't expect. You've got, like I said, Iran in the US. You've got trade war that's dropped the markets on Friday night. That news out that they've cancelled. So people are reading into that. What's going on there? Is it the same old as we've had in the past? They talk it up and then come out and say, no, we're actually going to lift tariffs because we can't come to some sort of agreement. And just the games that have been played at the moment, and they're both. This is probably the first time when the US has said one thing and Chinese have backed it up, but still nothing's happening. I mean, they've said, yeah, we've had constructive meetings on Thursday, Friday, but we're not going to turn up to their farm. So it's kind of mixed messages around. I think that's what's given people the irrits. So with gold, I don't expect it to be pushing down through this level. Unless they do come to an agreement, then boom, you'd expect that big sell-off. But I can't see that happening either just at the moment. So just by the way the markets are moving, Aussie dollar still drifting lower. It's bouncing up a bit today, but that's potential for that to hold a lower high and just continue this move we've been talking about since was way back here, 17th. Roughly around the 17th, we got that power down, pop back up, retest, push down, lower high, pressing straight down, retest to this low in here, 68.07, say, and it's pressed down again, taking out the low. So that's continuation on the way down. So that's quite a good, healthy move. And like we were saying this morning, this move up, if you can measure that, if I can get my Fibonacci, I want to see what it's actually retraced. That to there, it's gone over the 61%. So 67%. Is that right? Oh no, I'm reading the wrong thing. So about 63% retracement of this move up, which is not, it's not so bad. You sort of look into that 1/3 to 2/3 retracement of a leg up or leg down, 1/3 to 2/3. Now, a 2/3 retracement is a slightly weaker market. But if it only retraces around that 1/3 from the highs or the lows, bounced off the lows about 1/3, that's still either a strong market or a weak market. That's the way you sort of interpret it. So the deeper the correction, the weaker the previous move, if that makes sense. Whoops. So yeah, that's just on the Aussie euro. That euro is starting to look heavy again, potentially just bouncing up here and getting sold down into. We'll see what happens there. And the yen didn't do too much. So the US dollar rally didn't do too much, but on the back of this news, it was around 12:30, probably about 3 o'clock. The news hit. I'd say that was not so much the US dollar moving, but more safe haven buying into the yen to push the US yen down. Yeah. So we'll see how we go. Right. So that's it. So we've got, what have we got? The market's 25. Let's just see that SPY's doing again. So I haven't done anything today. I was thinking potentially of getting a short and extended market, but I don't like to short. You don't want to see. So if you're shorting on that extension like we've spoken about, for anyone that doesn't know, I didn't trade that there, that move. I was looking for that M pattern that we've always spoken about, but I did trade. This one here. I did trade that one. So there's a minor M pattern if anyone can see. M we're looking for. Whoops. So that's what I was looking for on that day. And we got that. We got the M pattern play out okay. And I was looking for that again, basically. Oh, here we go. I was looking for it up here, but I don't like the way the market sort of presses down, pops up, pulls back, pops up. It's kind of choppy, even though it's extended up here because it has gapped up. It's kind of a choppy move, and that rejection. Then after that rejection, I wouldn't have minded seeing a lower high. But it just didn't play out. If we got that rejection, you want to see something like that. It didn't play out, but you want to see it off that extended level. So really, I haven't traded that today, and I didn't really want to trade it here because I thought they'd just keep drifting lower to close that gap or at least retest. So probably guessing the market. There's no setup for me either on this side. If I'm going to go long, say that, what do you call it? Inside out style of trade. So inside out is more continuous. That's not really continuous. We haven't. What's happened here? Oh, don't worry about that. That's not continuous because we just sort of bounced off that low and come straight back up and then turn around and bounced off this high. So that there, if I'm going to get that type of setup, I'd rather see a minor high low play out. So you've got the market's pressed up like that, and if you're going to just say we're going to come off this support, say we're looking to come off that support, I want to see something like that, and then up we go, and just see where it goes to from there. You know, retest, high, low, bang, then you've got that inside out style of trade. You're sort of gunning for these. You're potentially high up at 67.60, just didn't play out, so just left it. G'day, Gino. Yeah, so that's it. Nothing on the spine. I'm probably going to leave it for the rest of the day because it looks kind of messy. I'm very, how do you say, suspect of these moves lately. So anyway, like we're saying, Perseus, I think that looks okay, especially on this weekly. That I like that weekly. I mean, I like the fact it's pushed up here. It's pulling back to the MA. So this, if things kick off, for instance, this should get a good kick on. And I think that move, you take it, say, from the lows 45 to the highs at 90, that's 45 cents, and add it to about, say, 65, you're looking at $1.10. So from here, 30, 40% gain, or maybe close to you, about 40% probably. If that's the case, if you can really start to extend, and that's at a stock standard type of a move. If it kicks on a lot more, because that weekly has, I mean, look at the base it's put in here. Years it's been hovering around here. And it's the first time it's actually broken these highs. I mean, it could do this, pop up, come back down, and chop around, and then come back down again. Or, I mean, that's all we can do is sit there and take the trade and see what happens. I think this would be dependent on what happens with gold. If gold starts to tick off and take out the highs and just trends because the world's caving in, then expect some movement, some good movement on this one. I would anyway. All right, what do we got? So what I want to do now, I don't know why I was looking at this one. I had this one on the cards, but it's come out with some news today. It's spiked up and straight back down again. So, God, what a flush out that was. You'd hate to see this if you were long. This kind of move, it comes out with some news. What it come out at 10.48. This is FDV. Comes out with some news, takes out that high. You know, the candle day opened at 73, pop up to highs at 81.5 and straight back down again. Now we're trading at 70, 74. It's actually bid there at 75, but very thin by the looks of it. What do we got? Yeah, not very, not a deep market at all. It's only done 100,000, but that would annoy you if you missed that sort of pop. Anyway, that's one we're looking at. Net, I've still got my eye on that. I kind of like this. Not so much the weekly there, is it? It's more. Don't mind this. I think it's primed, high, low. Stochastics are sold down heavily, and it's right up near 17. Last time it was down there, sort of heavily sold off. It was down at 12. So I'd rather see something like this, pop up, sit on top of the MAs for a bit as the MAs start to rise, and then get an entry. Are you John? You're holding net, is it, or you're holding FDV? If you're holding net, I'll be happy with that because I know you've researched it. And between us, we get a good trade. Just wait to see. Anyhow, what I'll do now, I'll FDV. Oh, good. So it's this one here. It looks good, even though that you got rejection there. It's probably going to lift its back. I think that's just a big clean out. People chased it higher. They've been squeezed back out, but ultimately, technically, it looks good. I mean, you got sort of divergence here, holding that support around the 70 mark. Weekly looks primed. It might have to do some work still, holding some higher levels, but it looks primed and ready to go. Had that move up, pull back to the MAs on the weekly, ready to go. Stochastics in a prime position too. There's not much. It doesn't look too bad. You got some volume come through here. It's come here and been soaked up on this move down. Started to soak it up around here. You can see the move up actually had some volume as well. So there's a bit of volume coming into it. All right. What I want to do now is we'll talk about some trades. We'll just talk through some trades rather than, we don't need to talk about the market. So I guess we can just talk about some trades. I've got, I think, one or two. I've got a whole lot of share ones, but you hear me talking about that a lot. Some positions, and we'll talk about some stocks after. So get ready just to chuck in some stock codes, and we'll look at those in a minute. But what I might just do is show a couple of bits and pieces, I think, that I've traded in the past and taking notes of, and just see and walk through them. So I got a feeling this was one that I sent to Davin years ago. So this is the Hang Seng. So what I want to get through, just talking about these, is even though it's an index, we're using very similar patterns and movements and weakness, trying to identify very similar things with price action. So I'm a big believer in not so much, I'm not looking at, your moving averages, even though there's a whole lot of jargon on here. I've still got the MACD here. We've got, I think it's a 210, is it right? A 200 MA, might be the blue one, and then a 20 and a 50 EMA. I'd say that's what I've got there. I've always sort of played around the 20 and the 50 MA for sort of directional moves, trying to get on the right side, and then the 200 just for the hell of it. Because when I was learning, I thought you had to have that. I don't use it much at all. I don't really see any point with my style of trading anyway. But I think over the years, I did look at the MAs a lot, and you're looking at and trying to use the MACD a lot, but in a different way. Now I think I've just turned it around and used it purely for momentum now, especially with the MACD and stochastics, because I always talk about overbought and oversold on your stochastics. So if it's popped up to overbought, it doesn't mean get out, which I think if you're looking purely at the indicator, you buy when it's oversold, sell when it's overbought, and reverse. If you're going to short it, sell it when it's overbought, and so on and so forth. But when the market's trending, it could sit around. If it's trending up, like stocks do all the time, they get stuck in a trend and they'll just keep ticking higher. It can stay overbought. So you don't want to sell because of that. So I think ultimately it comes down to price action all the time. And if you can learn to, I guess there's probably a few of you in here that have done it for a while, done price action for a while. And I mean, for instance, Helen's done it for quite a while. We have a different style of looking at it, but it's based around the same sort of thing. You're basing around the interactions between buyers and sellers and what you're looking for those interactions, and trying to judge with other bits and pieces of what's happening at that time. Do you want to get involved, or do you want to step aside, or is it time to get out? Sorry, making me laugh. So, but I think there's a lot of, and you could probably do a lot of research, and then when you start looking at different people, for instance, we call this is a RTF in terminology that I've learned, say, from Davin as well, a guy I used to learn from out of the US. An RTF, retest fail. Other people say a double top. I don't know, there's other wording for it, but we're all, I guess, most people will be, or most professional traders will be looking at the same things. They just word it differently from different areas. And it may sound all fancy, but really when it comes down to it, it's all the same sort of thing. And what sort of reactions you're looking for. You've got the market popped up here, it's pulled back. Okay, just on this open to start to hold this little minor level down here. I guess if we can see that. We're just talking about the start of the chart, holding that, start to power back up, failed again at the top. So when it fails the second time, you probably shouldn't be looking to buy it. You're probably looking for that deeper correction. So this of what we're discussing, I just want to go through maybe on this chart, and we get another one, is just talking about trying to figure out the interaction between buyers and sellers and what you'd be looking for. So you're trying to read, it's like, I guess, reading the story into it. And you can look at each individual candle, but you've got to have a bigger picture in your head of what you want to see before you start throwing your money at a buy or a sell, going long or going short. So I thought this is one of the first, this is why I was late. I started looking at what I was doing. Oh, that was pretty crappy. But I think this might have been one that I eventually, with Davin. So what I was talking about today, if you want to send in a chart and we can go through it, if you don't mind, it's up to you. I used to send this sort of stuff into Davin all the time, and he'd put it online and talk about it. But whether or not I did some, for lack of a better word, crappy trading, I wanted to hear what he had to say. And it's good to hear him say, oh, for instance, okay, I bought it in here. I think I lost. Or did I? I think I made. Yeah, that was a positive. So I must have sold here, bought it back, which is stupid. I bought it back real quick. So I can see why I sold it. Actually, that's not too bad. This trade here, for instance, was wrong, but I think from what I remember when Davin was mentioning, he goes, oh, look, there's nothing wrong with that as a long. You bought it, okay? It just didn't work out. So it was kind of good hearing him talk through the trades and what he's seeing and what I'm seeing, because it helped me focus on different things. For instance, I think I got lucky on this +8. Okay, so we got the retest fail. I know, okay, RTF on the upside like this, I want to be looking for a sell. This might have been very aggressive, but the market, the good thing is with the Hang Seng, it moves like a rocket. So you tend to, when you get it wrong, you tend to be up 10 points before you know it. If it does, especially when it breaks the level. So all I was really doing here, I think, a couple of red candles, I got one green, then failure again, and that's that continuation type of pattern off a lower high. And the lower high is a one candle lower high, and this is a 5-minute candle. So that got lucky. Didn't write it down, which I think what I've been doing lately is I've found a way to make myself stay in the trade longer. And rather than the 1-to-1 all the time and hoping you get 65% right, maybe dropping it to 60 but getting 2 or 3-to-1. So it just means your statistics over time are a lot better. And that's, I guess, anyone that doesn't do it, it's worthwhile marking up your trades, especially if you're intraday trading, because intraday trading is probably one of the fastest ways to learn to trade quick and learn to figure out your weaknesses and your strengths. And if you can mark those down, you may not notice at the start, but if you start marking it all up and you go, hang on a sec, every time I'm doing the same thing, I didn't let this ride. I didn't let others ride, and look what happened. This one dropped like a stone. I could have got out somewhere around here, even with this big grid candle expansion there. Got out there, made another 15 points, but I didn't. So it started by marking it up, it starts to pop in my head of what I'm seeing time and time again. Instead of just being up, say, 22 points for the day, I might have been up 40 points for the day. It just makes things a lot better. And that risk there couldn't have been, maybe shouldn't have been 15, could have been less. Just things like that when you start going through the market. Okay, so just before we get going, this is a 5-minute. Oh, this is a minute chart, sorry. This is a minute, what we're seeing here. This is the actual 5-minute chart. So what I was looking at, I think, just to get an idea of what's happened in the overall market. It's popped up here. We had this sell-off. We had another sort of consolidation down here, went back up. You've got to retest this high up towards those highs, and then it failed on the open, and that's this initial fail. Then went to come back up. So here I'll be looking for a sell. So the first trade, probably got away with it, but I would rather have seen a deeper pullback somewhere up here before you get the sell-off, and then go with it, because I think they're just a lot stronger. Whereas this one, maybe that's the reason why it's only 8 points, because you're looking for something. You don't expect severe weakness to come in, but then again, you just got to let every trade ride. So that was the first one. The second one was with the trend. But what I do notice here, looking back on it, you've got some key level breaks. You've got this low here taken out with this one foul swoop. This is your first sort of correction back up after taking that out. So this could be the major lower high you're looking for. And I was going long into it, which in essence is not a bad trade. It just didn't work out. Basically, popped up, had a pullback. I went off the high low. I'm looking for a long, but it was against this major structure here. So you're looking at this major structure on the left-hand side, and I'm going long into it, which probably wasn't the best idea at the time. But yeah, in essence, it probably wasn't the best idea, but it could have worked out. We could have get that drifting all the way back up, but it was sort of against the flow of things. And as it turned out, once I realized that, I stopped out here and then flipped over and went short straight away, because I think I realized that was actually a key lower high in here, as opposed to this RTF. So you got your first leg down, your first reaction back up, and you're looking for that secondary major reaction down, and ended up getting 32 out of that. So that wasn't too bad. But this is something we've spoken about, quite a few times. Just looking for these sorts of patterns. What's happening here? You've got the markets trying to go higher. A key level, it's rejecting that key level. So sellers are starting to come in. Sellers are starting to overwhelm the buyers, and you really get that note once you get these expansion candles down. So if the sellers are really starting to overwhelm, and you get to sort of this stage and you haven't traded, what would you be looking for? You're looking for further strength in selling. Are we going to get the secondary leg lower? And you're looking for this 1-2 move, and that was essentially that sell just in here was trying to take advantage of, and it worked out well. Don't know what this was. This is probably a stupid trade in hindsight, and this +3 was really a bit of a stupid trade as well. So it wasn't at any technical levels. Does that make sense? So this is what I was doing from time to time again, writing some notes, what I was thinking about, and it's times like actually today when I started looking at it, it's good going through it, because I want to see whether I've improved or not. If I haven't, then I've got a problem. Quit. Let me just see if I've got anything else. Yeah, no, that's not what I want. Go away. Go away. Open up. Let me just see if this is another one. It doesn't like me. So this here, I got a feeling was just the same session, but in the afternoon. Yeah, it was in the afternoon. So that was the initial day, which you saw there, and this is the afternoon. So how did I get plus 33 out of one trade? I can't see where I traded again. Anyway, I'm happy if I got 33 points. Oh, that's no, sorry, that was two sessions. So this long here, even that long there was probably a bit, in hindsight, looking at it now, see how the market was heading down. You got this pop up. So continuation really should have been a short if you're looking for that continuation. I was probably just guessing that it was going to bounce off that low. Ideally, you might have been a better trade off this after you get a few tests of that low and looking for that expansion higher. It was 11 points, but looking at that, it was probably more luck than anything else. So yeah, I thought I'd just show you that. A miracle. Uh, yeah, yeah, it is. Like Helen just put up a good point. I always find I did two things. So I either did all my trades, um, like we're seeing here, did my trades, mark it up, and then write because I want to see how I'm thinking and write down some notes of what I was thinking and what I was looking at in the thick of the battle, as opposed to going in later on and marking it up. Because marking it up, you can get in a bad habit of just, you're not seeing how you react under pressure. You're not seeing how you trade under pressure. And it's always good to do that. It's always good just to trade it and trying to work off the same philosophies as in, your RTFs here, your lower high in here, trading off that because it's higher probability stuff. So it's always good to do it, trade, but trade, if you're just starting out trading on a small slip, it's always better live than not live because it's funny, even if it's $1 a point, you're trading differently when it's real money as opposed to having fake money or having a demo account. Because a demo account, you just go, I'll just reset it. But you can't reset it. You can fund it again, but you can't reset a live account. And having that in the back of your head is another thing. So when you're trading is one thing, but if you have a run of losses, how do you react after those run of losses? After you've eaten away at your capital a bit, because that's all part of trading. And then what are you going to do about it? Are you going to just sit there and start doing stupid things, or are you going to mark up your chart, take your notes, try to learn, and try to, next time you go into it, try to go nice and clear with a proper plan, proper prep, all that sort of stuff. Um, but at the same token, I've always been a big advocate of just the bands on that chart. Oh, do you mean for the MAs, or I just got to get it back up again? Sorry, I'll just read your comment then. Arr. What was it? I think that's a different session. Who knows what that is? Where was it? Oh, that's different again. Hey, Pete, you're taking your wife for a walk, mate. uh, just the MAs. I'm only using really these MAs for, I'm looking for contraction and expansion. This is what I've been looking at. Basically, we're using the MAs, was it 2050 and 200? Not so much, I don't even bother with the 200 really, but it's more these, oh, unless you're talking about the bands we've been talking about lately, I didn't even look at it back then really. So it's only lately we've been starting to look at things a bit differently. Sorry, give me a chuckle. Anyway, so this is another day for you. I can keep banging on about this for a while. Put in some stocks if you want to take a look at them. Otherwise, I'll just keep talking about this sort of stuff. But here's another session. I can't remember what happened here, but it's obviously gap down. See this open? That was a bit like and this is off this is a 2-minute chart. That's not too bad. I don't mind that trade at all. Got 17 out of it, and the risk was below here if it failed. But you're looking for, this is a key. So anyone can see, it's probably hard to just see what I'm talking about. You've got this projection lower, extension lower. It bounced off. I don't know if this is a level I had in the prep or it was just a level after the fact. It bounced up. And as we come powering back down, you see you've got quite a few green candles, and then it stalls. But it stalls prior to that low, this low in here. So that's a good sign. It's starting to say, okay, buyers are stepping in. So it's exactly what we talk about. We talk about on stocks. In this zone, you're starting to get, rejection. This is your first candle after 5 in a row. 5, quite solid negative candles, especially that last one, really powered into there, and then we bounced. Okay, and then you got this indecision, this candle which opens and closes around the same. I can't remember, spinning top or something like that. That's an indecision candle. So that's where the sellers are going, hang on a second. They pulled us up short. The buyers are putting a bit of effort and pulled us up short of this low. If this was weak, it should have just plowed straight through. But instead, then you've got the sellers took it down and it's finished on its high, the next candle, which you go, okay, the buyers are putting in a bit of effort here. So two things are going to happen. It's probably going to drag in further buyers, and it's going to push out the sellers that may put them back on the sidelines if they're looking for, a push through this low. They're looking to get in the trade around here. You'd probably sit aside for a while. And what it does, anyone that's short in there is going to start to get them thinking twice. Okay, all because you're getting soaked up at a higher level, and a higher low generally means an attack on this high down the track at some stage, whether it's a hard, sharp bounce straight back up, or whether you're going to get a grind back up like we did on this session. But either way, it's leading to potentially higher prices. So when you're starting to see these things play out in live time, you want to be getting your mindset long. And then really what it comes down to is about the entry. And even though I know the MAs are down, this could be off a key level. But if you've got this type of reaction on your share even, and you've got the MAs are up and you're pulling back into the MAs, but you're seeing this type of thing, this is a heads up to be, and you might be on a weekly, it's just pull back to the MAs, but you're looking at your daily chart and you're getting some sort of action like this. You go, hang on a second, this could be a time to jump in and take a nice early trade because everything's starting to line up. You're getting the weekly, looks like it's just pulling back to the MAs and it's ready to bounce. It's in a prime position. And you've got the dailies doing some action and it's starting to get soaked up at higher levels. I want to look for entry. So the last step is just to look for your entry, how you want to enter. I guess from this one, all I was doing was buying on the break of that green candle because what you've got is this push down and it's a W pattern like we've been speaking about. So let me just draw that up. I'll draw on my drawing if that makes sense. So what I'm really looking at is this yellow, oops. So the market's not, I'm not looking, this is a key, this is a big pattern, and then you're looking for something like that, major W pattern. But if you look within this low, you've also got the same sort of thing. Still green. So you got the market's plowed in, popped up, pushed down, and that's, again, you got this pattern is the same as this bigger yellow pattern, if that makes sense. And it's just drilling down, and then you've got the market popping up. So it's really just looking off that W within a major W, if that makes sense, a major higher low, and you're looking for this minor higher low. You go, well, probably really starting to stack up. We're going to put a squeeze on the sellers. And I've got to jump in. I know where the risk is. Quite clearly, jump in, risk down below, and away you go. And then could have ridden that. I mean, this is, again, showing up the problems. I don't know whether they had a tighter stop, 10-point stop, and just ran a 10-point stop all the time. Or now what I tend to do is buy there, and I want to be proven wrong when it breaks that structure, that overall structure. But looking for going, if it's 1-to-1, that would have been a lot, probably would have been somewhere up here, down here, if I could hold it that long. Does that make sense there, guys? So that's what, that's a good example of the same sort of structure we could be looking at on your shares, anything, indices, your currencies, all that sort of stuff. And it's all built around, all this is based around the interaction between buyers and sellers. What's happening between the buyers and sellers? What are we reading into the charts? Okay, is it time to put a risk on? Is it time to look for the entry? Are we seeing a good zone? And this type of thing could lead, okay, we're probably looking for an attack on that high, which we got eventually. If I took something around here, that's 2 or 3-to-1, potentially, if I could ride it all the way back up. And that's the premise. Here, potentially, you got some weakness and it dissipated. You got this pop up here. So a bit of sideways action through there and then popped up again and extended. So it's all based around that same action, the psychology of what you would be doing. If you were short in here, what would you be feeling? I'd be feeling I want to get the hell out. If you're short in here and you start getting it popping up, this type of action, and then took out the highs just in here, what do I want to do? Okay, I'm short down here. It's looking good, looking bad. And then it pops out through the high. I might either stopped out or I want to be thinking twice. And look at this failed, didn't take out the lows again. These lows, again, a similar sort of W pattern for continuation. Yeah. So see how Helen's just mentioned tweezer lows. What she looks for, we're probably looking at exactly the same thing, different terminology, but it's the same sort of pattern, the same sort of structure, I'm guessing, the same sort of interactions between bellows and sellers. So if you can get used to it, even though I bang on about it regards to the Hang Seng, I think this is, or the SPY or anything, it's the same sort of reaction. And I might be approaching the market slightly different, like you can approach futures slightly different because it trades slightly different. It's got different characteristics. But in the zone where I want to trade, I'm always looking at very, very similar things. The interaction of what, and I want to make sure that I'm getting on the right side of the market as opposed to jumping in. I'd seen this powerful move down. I mean, most people would see a strong move down, good bounce, and as it comes plowing back down again, they're going to go, oh, I'm going to get short. Okay, perfect time to get short. I want to get short in here, and then find out they've got they're on the wrong side of the market, not taking much notice of it, and what's sort of happening. And half the time, I'm finding what I did with myself was by marking up all this structure. What it helped me was to take a step back slightly, as opposed to looking at one candle, which sometimes just gets you on the wrong side of the market, and it also helps it. You're not looking at the bigger structure, and sometimes it helps you hold it if you're looking at the bigger structure, as opposed to just going, "Oh, I got it right. I've taken my points. I'm out." All right. So what I found by marking these up time and time again was seeing the bigger structure. Okay, this is the bigger structure. What I want to look for a good little long trade, and it helps me get in the routine of looking at that as one area, not just this minor little rejection and look at pop up and then thinking it's going to go back down again. I'm looking at that failure to get down to this low as a significant move, potentially to target back up towards these highs. So what I was trying to do is by marking it up, even though I traded, I got it right. I could have got a lot. I could have done a lot better with probably another 20 point move up towards these highs potentially. But it gets me looking at the structure from a slightly bigger perspective. And I always found that when I trade, I might have done 10 trades in a day, and it was chipping away little things I'm looking at. Okay, failure, RTF, made little lower high, but the lower high was in context to, I wasn't taking into context the bigger structure and what's happened on the bigger picture, and I'm missing a lot of the bigger moves. Might be, and that sort of helped push me out of break even to being positive trading. And it's more out of a scalping mentality into something and let the movements ride a bit. So in all essence, I think this was a dumb trade, -2. That was probably a stupid trade, and I was on the right side, I think, by the looks of it. I sold, then bought it back 2 points high. Don't know why. This break here is probably a bit late, but the overall structure is quite good. Big washout here. You've got this move up, pull back, major high or low, pressed up into that high, failed. So that's a major RTF, and that's rejection with that flush out of the high, straight back down. And as it's coming back down, you want to be on the short side. So that wasn't bad. Again, could have held that longer. This was a short as well. Probably lucky that I did get out early because it did pop back up. So yeah, so that's probably enough of me ranting and raving. Do you any questions just on what we're talking about there? Does it make sense to what we're talking about in regards to structure of overall trades? Let's just look at one that we did have. So this is DCN. So you've got the market ploughing up. I mean, it's probably a lot easier on stocks because because you've got such bigger players jumping in. When they're jumping into something, they could sort of leave a footprint of what's happening with regards to volume. You can see volume start to pick up, not so much here. Oh, and this is just done 7 million. So, but on some of the smaller ones, I'll just give you, I think it was a good one on this. This is, I've actually got this stock. This is HMX. It's only a small one, so it's not an alert. But I think I bought it somewhere in here around 3.6. So I wrote it up, wrote it back down and back up. But the thing is, the volume on this little pop up was quite good. So if it didn't hold off the semis, I was going to be out. And luckily enough, it did. It's popped up the last couple of days. So we'll just see how it keeps going, if it keeps going. But everything's looking good. But it's leaving that footprint of the volume picking up. And we're still trying to trade it on the back of your overall structure. All right. No, it's probably not so good, is it? So that market's coming down, but you can see how it's held this level through around 2 cents quite a few times. It's the first time it's really popped up, taken out a key level after it's put in a bit of effort. I mean, this pop up here didn't take out this key level. Then we moved down, pop up, move down, pop up, move down. Okay, retest that low, and we've taken out. You can see how also the moves up and down are getting smaller. So it's getting smaller as it's trying to find that equilibrium point, and it looks to be the equilibrium point's around 2. Potentially, and that's we just got that first pop up. So I'm looking to take advantage off this weekly chart, to bounce off the MAs and look to see it get through 4, potentially start attacking back up to 5 or 6. And you've got, the beauty is all this move through here, it didn't get much volume, bit of volume through here, but it's got some major volume with this little pop up there. So it seems to be that there may be some bigger people or bigger players that have just jumped in and they're leaving a footprint of volume. And it's just a matter of trying to get onto the right side or getting your entry worked out. Any questions there? Pete, does preceding action have a role in this? Price action is coming from lower highs on a longer term time frame. Yes, yes. So what I just showed you, so I've got it here. This here, there was a lot of price action that I haven't shown you. I probably haven't got it. This is on a, I think it was a 2-minute chart I've got here. I would be looking at an hourly, the daily, so just a daily for a key level. You don't want to see, okay, it's this is looking great. It's got up to this level. I want to buy it. I want to buy it here. And all it is got a key daily resistance zone you're sort of trying to buy into, which doesn't make much sense. So you are looking at that, key levels on maybe your daily. If I'm intraday, I might be looking at daily, but not, if it's in the middle of nowhere, that's fine. You can forget about the daily. Then the half an hour chart and trying to get the bias to the half an hour. Are we trending on the half an hour down? Then I don't really want to be buying it. I want to be selling. And the same, then I'll probably be looking at 5 for some zones. This is on a 5-minute chart, might stand out a lot more, and then maybe for an entry on the 1. That's how I used to do it. Now I'm sort of mainly trading off a 5-minute chart. But yeah, it's definitely, you're trying to assess the action, because it's taking that step out. And it's always, you take one step back, you get a bigger picture. You take another step back, you get a bigger picture again. So and the biggest problem I had was with day trading was getting really caught up in all the candles and the wicks and all that sort of stuff, and then buying and then finding out that it was a screaming sell, if that makes sense. And it's also a bit of experience after this, but I think if you can by preparing, especially if you're intraday trading, preparing the market ahead of time, what you want to see. And so you're going down from that key structure, down to lower timeframes, down to your trading time frame, whatever that may be. And then you're marking it up, so you've got your levels marked up, and then it stops you from jumping in random times, because it's not anywhere. It could be in the middle of nowhere between your bid zone and your sell zone. You don't really want to be trading in the middle there because you don't know which way it's going. It's just taking a punt. It keeps you out of those zones and keeps you trading in the right zones by preparing a market. And it's the same with what do we got? What's another trade? RBL. Now this is one that's kicked on really nice for us today. Let's just get that over here. Oh. Yeah, let's just do it there. Let's do it there. So this here, we've got this gap up. All right, and it's what it's done. If on the weekly, you can see it clearer. It's got this big zone through here, powered off that zone before, and it's come back down there. So this here is a key high low. All right, so we'll just draw it up. So this is what I would have been looking at. Well, I hope I was looking at it. I'm not talking rubbish to you. But what I've been looking at on the weekly, as I'm trying to assess whether I should be jumping in here or not. So what you've got is this market's pressed down, and essentially we've just popped up here. Okay, that's great. A lot of these late buyers here, the first to get out. And then as you're watching it come down, no one really wants to buy into it. Then you've got the market really powering back down. So you got that 2-leg move essentially. And then it's found a zone, a higher level than 60 at 80, 20 cents higher. Okay, so at that stage, no, you don't know where it's going. We've popped up here. We're going to do the same thing and just tear straight through 80 down to 60. Once you've got it doing this type of thing, that's your RTF. Okay, you've got your RTF, oh, retest failed, double bottom, whatever you want to call it, off this zone. And we did the same thing before. Okay, so now I'm going, as it's lifted here, and I'm looking at it somewhere around here. As it's lifted, you go, oh, hang on a sec, that's failed. So buyers are stepping in. They're soaking up the selling pressure. Look at that selling pressure getting soaked up. Double bottom, divergence there. We did something similar. Boom, boom, double bottom, took off. So I'm looking at this thinking, if we just extend from this up to at least target those highs, we've got a cracker on our hands, a cracking trade. And I'm looking for that. This is your first on your weekly, the first pullback continuation that I'll be looking for, continuation pattern. Didn't have to. Oh, this is probably your first one up here, and it's still, if you just caught it here, great, you still got a profitable trade. If you happen to catch this one, if anyone can see, that was a great little entry. Off that, and then you got that expansion higher. So really, you had about 5 to 1 before you even had to worry about a red candle coming into play. So that's the weekly. So I'm in this zone here. If we can just drop it down to now the daily. So take into account all that action, even though it's gapped up here, I'm looking for that as a key double bottom on your longer term weekly. And I'm looking at this zone as a key higher low to play out. And really just want to see what the volume's doing to see if it does support it. So we probably jumped in a bit early. But as you got this, actually, let's just take a look at this. As we've got this starting to play out, remembering what we've got in our structure here, on our weekly structure, as we start to get this playing out, okay, this is where it's open, pushed up, come down, retest it. Okay, went up, retested it again. Okay, popped up a little bit more by this move, come back down and retest it for a third time. So the more you test a zone, the likelihood that the sellers are going to start stepping aside. Anyone that's sold going to want to close out. You get the quicker ones that recognize it earlier are going to close out first, and then sooner or later it swings from selling pressure to buying pressure, comes back in. And people might be looking for that gap to close. Okay, great, but it didn't. And what we've got is this pop up. We bought it essentially on a break of this zone through here. So we bought it on this candle somewhere in here at 135 actually. It was quite big risk, but what you've worked off one, 1, 2, 3, 4 times it's failed to break back down again and close the gap down to $1. And that is all off that key structure that we just mentioned. Key structure here. So you got a high low, break of this zone at 120, it gapped up, broke through it, come back down, retest it, and it's starting to go. So really the premise is that you're going to be driving up into the next resistance or potential offer zone or liquidity zone up towards $1.70. So this is all going off the same sort of things we'd be looking at on futures, the same sort of things we'd be looking at, the action between buyers and sellers. What are we seeing? We're seeing the sellers trying to push it down and they're getting soaked up. The buyers are stepping in. What are they doing here? Okay, the sellers give another nudge. Doesn't mean that selling pressure should give up just yet, but about here when it gets soaked up, by the time we pop up here, yeah, they probably should be giving up. And we had to ride it a bit to get that higher low. But now the last few days it's just taken off, and it's hopefully with this one, we've just taken a partial at 52.5 or sometime today, and see if this can just keep going up to $1.70. We might get a reaction off around $1.70, $1.80. We could even just get straight through that. 1, 2, if you could measure that up, what's that from 85 up to $1.45, 60 cents, $1.80, somewhere up to $1.80 potentially in this zone, which takes you up into about that liquidity zone as previously. Does that make sense? So Pete, that's probably a long way of answering your question of what's going on there and what we're looking at. So it's the same sort of process, looking at what sort of happened between buyers and sellers. And again, it's just building your picture up. And if you've got to step back a few charts, always good. Sometimes that weekly chart's down and you might buy it, but the buy setup might still happen on the daily chart, which is fine. You've still got to realize that maybe there's still some longer term sellers that are going to come in, and you've got to be aware of that. Now, if that weekly's pointing up and your daily's pointing up, great, let it run a bit, let it ride. If your weekly's pointing down, you could still trade on the long side off your daily chart, but you've got to know what that structure is saying to you on the longer term. because it just keeps you out of trouble. Or it could sit there going, well, I've got a profit, I might be up 5 to 10% on this trade, and go, I'm not. Don't ever think you're just going to, every trade is going to be gunning for the high, gunning for that 100% gainer. There's a lot that don't make sense to hold, and you might, like I said, you might be up, got on your daily, you bought it on your daily because it's set up nicely, you're up 5 to 10%, but it's starting to show a few cracks appear on the daily, and that's probably because there was weekly sellers coming back in and starting to smash it down again. And there's still some more liquidity of longer term buyers that or holders that want to get out for whatever reason. Don't question why. You just follow it, what you see. So that's why it's always good to take it. Don't just go, I always want my weekly to be pointing up. I always want my daily to be pointing up. There's still opportunity to be had in other areas. That's about it, I think, on the red bubble. QFE is coming back. In all honesty, that weekly doesn't look too bad. I just don't like that candle. Don't like that candle so much. And if that's, let's just go QFE here. So QFE is, how do you say quick fee? No, that's what I wanted. There we go. That's probably not so nice, is it? But you can imagine that it has started to reject. You're starting to lift. That looks good. Looks great. And this potentially the first pullback. This candle, well, probably just today, it's bounced pretty good today off that 50-cent mark. You probably, as you start expanding into the previous highs, yeah, you're going to get some sort of reaction. People who have bought it, had it in the float, watch this, go, yeah, I'm a legend, come down and, oh God, now I'm down. Whatever the float was, I'm not sure. Or I've given up, we might have floated at 30 cents. I've doubled money at 60, but I didn't take a profit and come and seen it all the way back down to, I'm up 2 cents or 3 cents at some stages. So you got these people that are going to be sitting through all that. And as it starts to expand, go, okay, second time around, I'm taking it. I'm going to take that. I'm jumping out. All right. So that's why you can expect some sort of reaction up towards the previous highs, or in this case anyway, on quick fee. And then you got that next week, bang, down. But this week it's just opened up and it's starting to lift again. So you can get that reaction. Then you got that green kind of popping back up. I think we got in somewhere here and it looked quite good. Okay, we've got another reaction back down, but it's getting soaked up again. So 1, 2, 3 times it's getting soaked up at 50. Probably just the MA is catching up. So if this doesn't get up through the highs at 57.5, probably in the next couple of days or so, I might be thinking of tightening that up or taking some off or just closing it. We'll just have to wait and see. But it's still, the price action is still in play. The weekly still doesn't look too bad. There's still reasons to be holding this. I think a lot of you are talking about getting in here. I was watching it for whatever reason, didn't enter down here, and that was a good little rally back up. High lows here, good entry zone as well. FMG. Whoa, got everything there, haven't I? Yeah, so FMG, you're starting to get it to pop up into these previous highs, 1, 2, 3. It's starting to get a bit of chop. It's not expanding anymore. It's whether or not the MA's catch up, it consolidates at around 9 and pops up again, or whether it's going to have pullback. So if you're long, you'd probably want to be, this is the way I would attack it. I'll probably be tightening my stops up a bit. If I was long in here, happen to get it off this. Actually, let's just draw that up. I think there's another. Look at this. If anyone's seeing what I'm seeing, great, because I think it's another example of a W pattern. We just talked about it on the indices. There's no reason why you can't look for similar things. You've got the market popped up here. Great, looking good. Double top here. Remember what we said about double tops? Look for a lower high and look for potential, the most recent higher low to be attacked. And it did, boom, straight through. Took out that, had to have a deeper correction. So at this stage, what you're looking for is, okay, is that cleaned out enough of these buyers the last few months? The people who have been buying the last few months, are they out or are they not out? Has it cleaned out, put enough fuel back on the sidelines for another move up? And then all of a sudden you get this type of move. You get that W coming in. All right. And at this stage you go, hang on a second, I've got this pop up, pull back. I'm starting to build a higher low on the longer term. Okay. If that's the case, we may just extend somewhere in here. I might get a trade. It could be 1-1, 2-1. So be it. Still worth taking. But there's enough chance this is going to continue straight back up and attack the highs again. Okay, because of this major structure, that's a deep enough pullback to wash out enough people to start the new leg up. And you can see how it's stretched down here. Volumes coming in, getting soaked up through here. all these sorts of things. It's getting soaked up, little spike on volume. I'm guessing it's this red candle here, this spike in volume. Let me just draw it in something different. I'll use the arrow. So this volume, I think, corresponds to this red candle. So good spike up in volume as it's come into this previous low at 720. So somebody is happy to soak it up there at a slightly higher level. And that's your W pattern, and up we go. So it's really just, there's potentially an entry. I'll just draw it up in this. So this really is, your top is the entry. You stop at the break at the top, and your risk is down below. So that's what you call your box it up, and you just see where your risk is. There's your risk profile. That's how much I'm risking in that box, basically, and 2 to 1's up here somewhere. So great. Oh, sorry, 1 to 1. You got your 1 to 1 pretty quickly after a few days, and it's broken through. If you're falling up off the high lows, then yeah, high low here, and you didn't really, you probably maybe starting to think twice about holding it here, but there's no reason why this just can't consolidate and go again. This wick here maybe lead you to believe this candle here is a bit uncertain. Another, at the moment, uncertain candle, but there's buyers still supporting it. To me, that's running out of steam. If we consolidate sideways here and we pull back, as in the stochastics come back down around the 60% mark, but it's going sideways, that's not a bad sign. If we get a break out the top, so it's worth just holding on to it for now. You can put your stopper, maybe 870. If you get down to 870, it's stopped out. It's probably worth just reassessing the situation from the sidelines. Yeah, but the thing is, that price action alone, I wouldn't get out, but I'd be on the offensive or defensive, sorry, because we are back up into these highs, right up to those highs. So it's worth, if there's no highs there, you could probably have looser risk. But once you get up to those highs off this key low, it's a zone where it's been a key zone before, and there's been some key selling before. It's a zone where you've got to maybe tighten your risk up a bit more. If it's going to break through, it's probably just going to go through without you. And if it has to have a deeper pullback, not like these little pullbacks that we've seen here, and here, not like a little pullback. If it has a deeper pullback, you maybe want to be out, because you don't know if it's going to turn into something like this, or it's just going to pull back, hold up here and then go do something like this, have a minor pullback. If it does that, then you just re-enter, and away you go, looking for the break at 940. But if not, and it pulls back to test all the way back down to 7, you want to be out. Simple as that. So that's what I mean, where you know your zones are, where there was some liquidity before, there could be selling liquidity up here again. It's starting to struggle now. We don't know how much liquidity is currently come in. We don't know if it's really going to get smashed or it's going to consolidate. We don't know what's happening just yet, but it's worth tightening risk up, especially if you got in here. Tighten your risk up maybe around there. You go, if I get tagged on that, so be it. Because it's off a key zone. If you get tagged on that, it's probably some weakness starting to come in. You're not the only one looking at that weakness. Probably someone else is going to unload, and then step aside and away you go. Bear suit. Yes, that's that one there. That's FMG. I know Vin just mentioned IHL would do that, and we'll probably have to call it a day. IHL, if we go to weekly, that weekly's quite nice. It's only a smallie, but this weekly, see, it's spent a lot of time soaking up this low, and this is the recent push up with volume. Got supported in here, maybe that was on the back of some news, got supported in some good volume coming through. Don't know what that was. Back at the end of last year. Probably wasn't the right time to be buying anyway, as in expecting a run up to new highs when basically the proverbials hitting the fan across the board in the global markets. That's when that big sell-off from September, back in the Christmas. But good volume. Okay, that's a bit of a heads up. What are we looking for? Some buyers are starting to move into the game. Some more buyers than previously. All right, let's keep an eye on it. Pop up. Okay, maybe, sometimes you just got to realize, just because it's gone up, it doesn't mean you should be in. It doesn't mean, sometimes they go like that and they just keep going. Okay, you've missed it. I mean, that's why I'm always happy to be a technical trader, because I don't have to do too much work. I can look at this. I've made my decision within the first few minutes. I've looked at the volume and I know what I'm going to be looking for now. I'm looking for that high low to build somewhere around here, and then look at that pop up back up through 10 or so, take it to highs, 11, and look for that extension. The next level across is 20 potentially, which is this liquidity zone in here. Okay, I've already got a trade set up. and just see if it plays out. So I wouldn't mind. That candle there's got me a bit nervous, but if it does pull back and get supported above 7 or even around 7, that low at 7.6, yeah, and I want to see liquidity come in, great, that's good, and see where it goes to from here. But either way, that weekly looking pretty good, and I like, see this stochastics is coming off, but the price is sort of ticking up. It's still showing some good signs of strength. All right, and you've got your high low potentially just in here. So if this could start accelerating up and take out 11, then you've already got 10 to 15% up your sleeve. All right, we're at up 23 at the moment. We'll probably finish it there, guys. We'll see how we go. Yeah, that's it. That's it. All right, thanks for joining me, guys. Hope you enjoyed that. Hope there was something you can learn out of it. And any questions, even if you bag me a bit, I don't mind. Just send me through an email, support@tradesetup.com.au, and then I'll get back to you. Otherwise, have a good day. Hopefully things continue on. We're having a cracking day for trade setup at the moment. Hopefully it holds that into the close. Shorts going down, our four longs are up, which is always a good thing. All right, guys, enjoy your day. I'll speak to you again probably tomorrow morning. Cheers, guys. Bye.